Welcome. I'm Neal Gorenflo, co-founder of Shareable. I've written about the frontiers of resource sharing for over a decade, from tool libraries to new democratic organizations. I've been invited by my friends at Common Trust to host a series of conversations about their new book, and it proposes an ambitious but pragmatic pathway for scaling the shared and steward ownership economy. And the title of the book is Assets in Common: Stories of Business and Community Leaders Remaking the Economy from the Ground Up. And it's just been released. And today is episode 1 with Common Trust co-founders and the book project leads, Zoe Schlag and Razo. Hey guys, you ready for this?
Good. Excited to be here. Thanks for having us.
Yeah. Let's just start with some quick introductions, just name, title, affiliation, and your role in the book project. Full bios will be in the show notes. Zoe, let's start with you.
Yeah, I'll kick us off. I'm Zoe. I'm a co-founder and managing partner at Common Trust. We support businesses to exit through employee ownership using employee ownership trusts and perpetual purpose trusts. My role in the book, we really got to support the phenomenal team of researchers who dug into the case studies you'll find in this book. We were really excited to support them to kick off this initiative.
I'm Eric Razo, co-founder also of Common Trust, and have an additional role as co-founder of the Purpose Foundation, which is focused on supporting and spreading steward ownership.
Great. So let's get to the heart of the matter. We don't want to bury the lead here. Let's dive in. What is the big idea of the book? Derek, let's start with you.
The big idea of the book is that over the last decade, we've seen this huge increase in the movement towards shared ownership and steward ownership as solutions to a wide-ranging set of economic challenges in the US and worldwide. And so there's tons of examples of this, and we're going to talk about a bunch today. The most important thing to say is there's now hundreds, maybe thousands of leaders around the country, business leaders, community leaders, policy leaders, economic development professionals, et cetera, who are now looking at shared ownership of assets and stewardship models as a key lever for keeping wealth local, for preserving businesses, legacies, and values in the long term, for ensuring housing affordability, and many more solutions. So there's this whole panoply of economic and governance challenges that we're seeing these solutions be looked to as a key toolkit and lever. And so these leaders are looking for solutions that figure out new ways to use capital for the common good, figure out ways to distribute ownership to people who create the value of an asset, and to protect wealth and opportunity locally. So Zoe and I have had kind of front row seats to this movement. We've built alongside these leaders. We've worked with lots of the people who are creating this momentum. Zoe has acted as a funder. I've acted as a co-founder and builder and a funder as well. And so we've seen what makes these projects succeed and fail. And we felt the headwinds and tailwinds. And so the thesis of the book, the big idea of the book, after working with hundreds of leaders and talking to people all over the country and around the world about this, is that the sort of next frontier of the movement is these shared assets, shared infrastructure. So in order to scale the shared ownership movement and the steward ownership movement in the economy, we really need to move beyond doing the sort of one company, one piece of real estate at a time approach towards building shared infrastructure that knits businesses and communities together economically. And I'll sneak in a second big idea, which is that this has already happened. The examples are all around us, hiding in plain sight, and they're working at scale.
That's exciting. It's a pivotal moment. And your vision and these examples, this trend, can get us that next leg of growth of these type of companies in the United States and elsewhere. Zoe, what would you add to that?
I think you nailed it. No notes. Good job, Derek.
Okay, great. All right, so I wanted to just dive right in and get like the big picture about the book. We need to back up a little bit and unpack what you said. There's a lot of terminology in there that not everyone will be familiar with. And let's just start with the who of this project, right? So the book comes out of a constellation of organizations. What are the entities that are involved and what do they do? And Zoe, we'll start with you.
I'll start with Common Trust. As I mentioned, we're an organization that supports business owners to exit through employee ownership using employee ownership trusts and perpetual purpose trusts. A lot of our work actually came out of the work of Purpose Foundation that Derek is going to explain in a little bit, but has really been prompted by this massive need and market demand of business owners looking to sell, who are looking for a way to exit their business in a way that keeps jobs in their communities, keeps businesses in their communities, and really supports workers for the long term. So I'll pause there on Common Trust. And Derek, maybe you want to add a little bit of context on Purpose?
Sure. Purpose Foundation, founded a little bit over 5 years ago, and goal is really to rewrite the rules of who benefits from and controls assets in the economy with a focus on this idea of steward ownership. Steward ownership is it's a sort of new ownership model that is actually rooted in 100 or 1,000-year-old history of how do we create assets and that can maintain their purpose and mission over a long period of time, while also continuing to be competitive, continuing to create value for their communities and owners and others who contribute to them.
Derek, how do these two organizations work together?
We started the Purpose Foundation in the US a little bit over 5 years ago. We'd run a couple different strategies and really came to this point where we were doing really like nonprofit programs as well as direct sort of client work. And at a certain point, both were going really well. And so we decided that the direct client work needed its own home. And that's when Zoe and I decided to team up. And
yeah, that's really cool too, because different vehicles for different purposes. Some of the most exciting and successful social enterprises I've seen is where they combine different types of organizations, but all have the same purpose.
Yeah.
So those things can work out together really well. And then there's also One Project. How do they fit into this?
Yeah, so One Project is the funder and sponsor of the work.
The work
We've
on
been
the
working
book.
with on the book, yeah. And they've also supported Purpose Foundation, and they're really like a leader in the space of trying to understand the commons and approaches to economic development that that achieve all these different goals of supporting stakeholder ownership and
they're cutting edge, those guys. My friend Shona Sachs headed up One Project for a bit. I actually launched them. Yeah. Okay, that's great. I wanted you to walk us through a deal you've done at Common Trust that kind of illustrates this opportunity and the kind of work that you do at Common Trust.
Let me tell you a little bit about Cle Auto. It's one of the businesses that Derek and I worked with, I want to say back in 2021 or 2022. Cle Auto is a group of 4 auto shops based out of Utah, originally founded and owned by 2 brothers who started the businesses back in 1996. Kevin Clegg, who is the CEO of the business, he told us that when he joined his brother to start these businesses back in 96, he said, "I will do it on one condition, which is I want to exit through employee ownership. At one point, I want our businesses to become employee owned."
Wow, he did that. That was
Kevin,
upfront?
Yes, which
that
we
is
rarely
crazy.
hear
So,
to actually have that
that
foresight.
is so cool. Yeah, go on, please.
Yeah. And I would attribute a lot of that to his background, which he was in HR prior to starting that business. So he had a particular lens on businesses that people are really the assets, that they are really the value of these businesses who are driving its value, as opposed to, I think a lot of folks can think of employees as a cost center in a business. And he flipped that. He had a entirely different perspective that his employees are what made his business valuable. So he really wanted to support them. So Kevin came to us a couple years back and said, "Hey, I've looked at the different forms of employee ownership. I'm really interested in an employee ownership trust for a couple reasons. One of which is he wanted to find a long-term ownership structure for his business. He didn't ever want that business to have to be forced to sell again. And so we supported him to design an employee ownership trust as an exit vehicle for these 4 businesses. We think it's the first EOT holding company in the country. So Derek really took point on designing the legal structure there and working with them to really codify the core values and principles that they really wanted to see enshrined in the trust. And then the other side is that we actually supported them to finance the transaction as well. We provided some debt financing to buy out the shares to move them into the trust.
So the brothers had to get bought out, right? By the employees.
Yes. Well, by the trust.
Okay.
So the way that this works is we make a loan that allows to the business that allows them to buy out the shares from the selling owners. And then it's company cash flow that pays down the loan over time. So it's a really good model for healthy cash flowing businesses that want to continue to grow in a really healthy way.
Yeah.
So we supported them to do this. I want to say August of 22 is when we transacted. And it's been really impressive to see what has happened since the original transaction.
Yeah, what's the impact been?
Yeah, so they've got about 50 employees at their business, and of this,
It's 50 employees and 4 businesses, right?
that's right, 50 employees, 4 businesses. And when we were talking to Kevin back in December of this last year, just to hear how the year had closed out and whatnot, what we heard from Kevin is they were able to distribute record profit sharing with their employees. They had their best quarter in company
What?
history, 2 quarters in a
Wow,
row.
nice.
They doubled their profits from the year prior to this transition. And the piece that I think is really exciting here is they did this all while receiving their highest customer satisfaction ratings in 20 years of company history. So it's I won't let my confirmation bias purely employee
Yeah.
ownership. There are certainly other dynamics at play, but I think it's a really powerful example for the potential of these opportunities. And I will say Kevin was also one of the reasons we got really inspired to write this book, because if you talk to him, he's really interested in the structures that we explore in this book and how he can keep pushing the ball
And
even
further,
further than he has already with employee ownership.
Wow, that's such a great case study. Those are just like undeniable results, right? Outstanding. I want to go back though, because there were some things in there, employee ownership, trust, and Derek. One of the things I really appreciate about you is you have this kind of unique perspective on the spectrum of alternative ownership structures. I wonder if you could sketch that out, not only what you guys do, but the bigger picture and where the stuff you focus on fits in.
Yeah, totally. It's worth saying that like there is this huge spectrum of alternative ownership and what it means. In this book, we study a whole bunch of different examples about what that can look like, both in the sort of individual enterprise level, but more importantly, across enterprises and the way that enterprises can share ownership and from cross shareholding and stuff like that. I would say that the key concepts that one is going to want to have in their mind going into this book are this idea of shared ownership and this idea of steward ownership. So shared ownership is really a general kind of catch-all term for any ownership structure, arrangement of ownership that shares the ownership of the enterprise or asset, be it real estate or something like that, with the stakeholders, the people who are involved in either using or producing that asset. So in the case of a business, you're going to be talking about employee ownership usually, or in the case of Patagonia or something similar, you might be talking about this more stakeholder, Earth as our stakeholder ownership. And if you're talking about a real estate, then you're probably talking about community ownership or tenant ownership or something like that. That's the first big bucket. Shared ownership is just a way of sharing the ownership of an enterprise or an asset with the stakeholders who are involved in creating or producing or benefiting from the asset.
Yeah, it's just, I asked that question because when I was doing editorial at Shareable and researching and writing about all the different ways to share resources, including just democratic ownership and control of companies, it was mind opening because it was like, there's the C Corp, the S Corp on one end, and then you've got like the crazy blockchain projects where there's everything is like completely distributed to the users and they control everything there's not even like a legal foundation for it. And
no entity.
No entity, right? Yeah. And then but there's a lot in the middle there, right? There's people are familiar with employee stock ownership programs, worker cooperatives, all types of cooperatives. And those are like in the middle. And then employee ownership trust and steward ownership are in the mix too. How does steward ownership and shared ownership, how are they different and how do they relate?
Those are the kind of big two concepts in the book. And shared ownership you can think of as a much more broad umbrella. So it'll include anything where, like I said, the stakeholders are involved in the ownership of the enterprise. Steward ownership means something actually a bit more specific. And steward ownership is a model of ownership where two things are true. So one is that the profits of the company are going towards the purpose of the company or the asset, right? You have this kind of direct relationship between the success of the business or the asset and the purpose that is being pursued, that's defined up front. The second kind of feature, any given of steward ownership, is that the governance is protected. So it is protected from takeovers and it is governed by people who are connected to that purpose. So the key difference here being that in a way, steward ownership is a bit more specific and is talking about assets which have a higher purpose. That purpose is protected and it is governed according to and in alignment with that purpose instead of being governed with purely being in alignment with the shareholders. Often shareholders are in the mix, and you can definitely have some of this is not a sort of, it's worth saying, both shared ownership and steward ownership, but steward ownership in particular has been around for hundreds of years. There's some of the largest private corporations in the world are steward-owned companies. A lot of them are in Europe, so it's a little bit more of a foreign concept to Americans, but it is growing all around the world. So this is a concept that, while it might be new for a lot of people, is actually has a lot of historical precedent, and two, has proven to be successful and is out there in the world right now.
Yeah. And Zoe, how do these two things relate? I mean, you can be both, right?
Yeah, it's a good question. I may try to answer this question from an investment perspective because I think it actually elucidates how they can fit together and how they can actually mutually reinforce each other. At the center of any shared ownership thesis is really an incentive thesis. Our friends at Social Capital Partners have written about this, but really what you're talking about is like the key stakeholders at the business, whether that's employees at a business or tenants in the context of real estate, they are aligned to benefit the business, and they will benefit when the business does well. So they are incentivized to ensure that the business does well. So that's on the shared ownership side of things. Steward ownership is really interesting to me because there's really strong data about how steward ownership layers on resilience onto assets because of the governance principles that Derek just talked about. There's some research out of Europe that steward-owned businesses or foundation-owned companies have a 6x higher survival rate over a 40-year period. There's really strong data over there that demonstrates the staying power of this particular model. And so I think whereas shared ownership is an incentive thesis to build value, I think of steward ownership as a long-term risk management strategy for a business where it is going to be thinking over a longer term because of its governance structure that allows it to be less subject to some of the external macro forces that we might see in other businesses. So I think with that in mind, a business can be operating with both principles of shared ownership and steward ownership, or it can be one and the other. And we've seen both, and we have examples of both
in the
this
book.
as well.
Yeah. To kind of ground those examples, like when we're talking about shared ownership, one of the funny things about this topic is that the topic itself is obscure, but actually the examples are all over. So every credit union that you've ever engaged with is shared ownership, right? Every REI is like another household name of a company that is owned partially by its customers. So that'll just give you a sense for the type of companies that are out there. And
in the rural context, there's like rural electric cooperatives, and telephone companies, and all kinds of farmer co-ops.
Public supermarket is another one. A lot of people in employee.
It really is much more part of our economy than people realize. You mentioned credit unions. If you added all the assets of credit unions up, it would be the fifth largest bank in the United States. I know you guys go into that, into credit unions and shared service organizations and stuff like that.
A lot of what you're talking about there is directly related to the sort of motivation of the book is also to continue to reveal how common these structures are out there so that we can all look at them and say, oh, we want more of this thing.
Right. I was going to ask you, like, how you went from, you're doing the kind of deals that you do. It's very intense. It's get your nose to the grindstone in the details, legal documents and spreadsheets and all the whole works. And so how do you go from that to doing a book? For other motivations for doing the book, you had to more than just to reveal like what's out there.
Yeah. I can share like how we got to the book.
Please.
We definitely didn't like set out to write a book and this project. Where we started is I had mentioned with Purpose US, we had been building this kind of set of programs to promote like steward ownership and shared ownership. It's a thesis at Purpose US. And we had also been doing this kind of direct consulting work. One of the programs that we ran was called the Purpose Emerging Fund Manager Fellowship. And it was really focused on working with leaders around the country who were emerging fund managers looking to start new funds that integrated these principles of shared ownership and steward ownership into the capital that they were raising so that they could deploy that capital in a way that actually preserved the shared ownership in the underlying either businesses or real estate assets, right? So looking at companies that are new investment firms, helping start new investment firms that are looking at either helping employees buy out the companies they work for or helping community members buy the real estate in their communities. That's really the focus of the program. This program created a ton of value. We worked with 11 different groups around the country, one of which a standout success from the program was this work that we did with a group in Boston that ended up setting the largest single acquisition land trust in the country, structured as this trust model, just community ownership and community led. So it's a $50 million asset vehicle now for building more community ownership in one of the most difficult real estate markets in the country. So that's like that we were running this program. Yep. And what we saw was that across the 11 groups that we were working with, everybody was running into the same issues, especially after their fundraise or during the fundraise. We had two approaches in mind at the end of that process. One was to scale up the direct work of converting companies, and that's what Zoe and I are working on with Common Trust. And then two is to go deeper to find real solutions for the shared problems that the sector was facing that no individual group or company was going to actually be able to solve on their own. And the reason for the book is really, we knew that there were these solutions out there, both historical and also being built in real time. But we felt that this was an aspect of the movement overall that was being overlooked, even though it's like critical to the success of the movement as a whole. And that's when we partnered with one project, kind of design this research program to go figure out what the shared solutions were. And as a part of that, ended up deciding, oh, actually, this is a huge piece of work. We're going to need to write a book to actually tell the story of this kind of business and community leaders who have really been tackling this challenge.
Right. Yeah. And the book, Assets in Common. So it'll be like anybody can get it for free.
Yeah. There'll be copies available for free and there'll be copies available for print as well.
Awesome. Yeah. And so you brought us back a little bit to the book's thesis that the shared and steward ownership economy can be scaled through shared infrastructure, through assets in common. I'm a believer, but I can see how some would be skeptical. They might ask, for instance, like these complicated and not well-known arrangements, can they really have the impact you foresee? So what gives you confidence in this thesis, Derek? And I want to hear from Zoe.
What gives me the most confidence is the empirical evidence. There's a ton of these networks out there that are already implementing all the solutions that we're talking about here, that are working at scale, that are working in competitive markets, that are working in different jurisdictions, be it the US or overseas. To be fair, it's clear the evidence shows they're hard to build.
Yeah.
They're non-trivial, but once you build them, they do provide, I think, a legitimate and powerful alternative approach to building economies that preserve value in communities and maintain competitiveness. So I think that's the biggest thing for me is doing this research project. We knew that there was going to be some examples out there, but I think Zoe and I were both shocked when we really started to dig into the examples and looking for new examples that we didn't already know about, just how many we found that, like I said, are hiding in plain sight and that are part of a lot of people's everyday life or are bedrocks of certain industries, but you would never know unless you went out specifically looking for them.
Right.
Yeah.
Zoe, what would you add?
Yeah, I would just add to that. Prior to Common Trust, I was at a family office funding these types of projects. And so had a lot of conversations with other funders looking at shared ownership models and these steward ownership models. And I think the thing that I consistently kept hearing from people is we just need a demonstration project. And if we have a successful demonstration project, we can bring it to our investment committee and we can start to scale this work up. And I have to laugh because these demonstration projects they've existed for
That's why I was like smiling and laughing. This has been done many, many times over hundreds of years, if not longer, depending on what we're talking about.
That's exactly right. And I think a lot of folks like to think of the shared ownership space as really innovating and really pioneering new models, which in some cases is very true, depending upon the structures and the approaches different groups are using. But in many cases, it's just back to basics of what people have been doing for a long time. So I think the examples we looked at date back quite some time and just demonstrate that if you are looking for demonstration projects, they're already
so
there.
now can we see a demonstration project and you have a book, right?
Exactly.
Yes. Yeah, that's great. Yeah, I hope that works out.
Yeah, I think the other thing I'll say is what became really clear through the process of researching the book and gathering examples and also trying to generalize about the examples and talk about what is common and different about them is these are not just ideas that somebody came up with and threw together, right? These structures are solving real world problems for groups of businesses and for communities that have like real and urgent needs, right? And I think just another thing that gives me confidence in the thesis of the book and like why this thing is valuable is these are real world examples that are solving real world problems, not theoretical ideas about how we might in the future one day restructure the economy to be maybe slightly better. This is like right now it's working for companies that are tackling the challenges of
That was like the sort of like place I got with Shareable, and just seeing how there are so many different ways to do things. Like the tool chest of humanities is vast, but our awareness of it is not vast, right? And when we go into these sort of transitional times, which I feel like we're in now, this is when you need to go, all right, what's in the tool chest? We need to pull out some new stuff, right? Or not new stuff that's there. So I love that. I feel you, man. So Zoe, why is this opportunity important for the United States right now?
Yeah, and the piece that gets me really excited about this here in the US is we are in this incredible why now moment, which is the quote unquote silver tsunami, which is in the US right now, there's a tremendous number of businesses that are owned by baby boomers. Something like 40% of small businesses are owned by boomers, which is contributing to the fact that over the next decade, it's projected that 3 in 5 small businesses are going to seek a sale. That statistic on its own is an insane number for us to think about. But the piece that got Derek and I really interested in this space and what gets us excited about this space's opportunity with shared ownership and steward ownership is if you think about buyers for these small businesses, traditional buyers are just going to absorb a tiny fraction of those businesses that are transitioning. So if you think about the opportunity across the US right now, it is small businesses on every main street in America. They're looking to transition because their owner rightly wants to go sit on a beach somewhere and relax after decades of hard work. And shared ownership and steward ownership really provide one of the most scalable ways to support those businesses to stay in business and protect those jobs. That's one example from the business owner landscape, but there are dozens of other directions into this. The other entry point that I think about and that I'm particularly excited about is municipal assets. We covered in the book, we wrote about urban wealth funds, and that is really looking at the opportunity with publicly owned assets, for instance, real estate owned by a city that could be better managed in order to fund social projects for that particular. You could take the real estate and the assets that a city owns and use those to fund things like affordable housing or better public transportation. And that's this huge opportunity that, at least here in the US, we're barely scratching the surface. There are some really great use cases from around the world, particularly Copenhagen as one example. But I think there's just a huge amount of opportunity across all dimensions.
Yeah, I love that. I love that example about municipal land, because they often, or at least the kind of standard way to cities deal with it is as a commodity, not as a commons or a public asset.
My kind of thinking about like why this opportunity is important is directly related to what you just said, Neal, which is there's a sort of consensus that the way we are doing economic development writ large is not creating the outcomes that we want, right? I think this is like generally accepted across the political landscape, local, national, et cetera, et cetera. However, the solution set that we appear to be able to bring, to your point about the toolbox, the tools that we're able to bring to the challenge are the same tools again, right? And so part of why this book and why this conversation feels really important for the US right now is that we're in a moment of there being this kind of maximal desire for new solutions, but actually like a minimal amount of imagination being applied. And so the opportunity is to greatly what we can imagine,
or even historical awareness,
legitimate solutions,
or even historical awareness, right? Which is part of your imagination.
Totally. Yeah. So the awareness of what tools can we bring to bear and what has been done and to Zoe's point about the demonstration projects, there are many demonstration projects, and certainly one of those is going to be relevant for a rural area of Colorado or whatever. But if they don't know about it, then they're not even going to attempt to implement a solution that might be the perfect fit for what the challenge that community is going for.
Yeah. And while we are talking about like cities, municipal, is there a region or area where this strategy has had a meaningful impact on the economy?
I always think about, we talked a little bit about the sort of community ownership project that we did in
Yeah.
Boston. And I always really like to highlight the work of Boston Impact Initiative and Boston Ujima Project, which are examples of these kind of networked assets and groups of organizations working together for a sort of higher purpose that have achieved like some really amazing things with a really modest amount of resource overall in comparison to the kind of like size of the challenge that they're taking on. I can highlight the specific work that we supported on, which is to create this largest single acquisition land trust in the country. It's actually owned by the community through a trust. And so the community has this kind of perpetual right to govern this asset as a community good that has been funded by the supporters of this series of organizations who have been really building the groundwork, if you will, for that project to come together over the last however many decades. So that's an example of where bringing the social capital of that community to a kind of structured, like bringing the tool, which is this community ownership structure, to an existing ecosystem of organizations that already have kind of resources and culture and buy-in from the community, enables this like huge opportunity that nobody would have necessarily individually, certainly I wouldn't have necessarily individually looked at the situation and said, oh, this is exactly what's needed. Once you bring together the toolkit and the community who really does know what they need, you find these like amazing opportunities that are transformative.
Yeah. Zoe, what would you add?
I thought Derek gave a really good example of these models in the context of urban areas. And I think there's equally as exciting opportunities in rural areas, which I think is oftentimes vastly overlooked when it comes to financing and otherwise. But one of the examples that we go into depth in the book is a group called GoodWorks Evergreen. They're up in Montana. They are a holding company that acquires small businesses. And when I say small, 5 to 10 workers in those businesses, which if you think about those businesses facing this generational transition where it's the owner getting ready to retire, they're probably not going to pass it on to their kid. A 5-person business does not have many acquirers knocking on their door typically. That would be pretty rare. But in the context of these rural areas, if you're talking about 200 people living in that town and a business that employs 10 people going out of business, it's a meaningful percentage of job loss in this rural area. And so what they've done that's really interesting is created this holding company that acquires these small businesses into a larger structure that supports their long-term survival and endurance as businesses. And it also allows for the preservation of these businesses and small jobs. So if you think about the potential of those types of models across the country in rural areas, all of a sudden, these principles of shared ownership and shared balance sheets allow us to protect businesses that otherwise would have to just close up shop.
Yeah. When I think about the silver tsunami and is it millions of small businesses in the United States that are at risk here?
Definitely million. And that's the thing that makes this both incredibly exciting as an opportunity and also incredibly urgent that we start moving on some of these
because
things.
if they, like what I understand is a large percentage of these business owners don't have an exit plan. They don't have a succession plan.
That's exactly right. And I think part of that, one piece of this is just really fear of the unknown for who is going to take over their business. And are they going to protect this thing that they've spent decades building? And a lot of them have rightly earned skepticism about other structures of ownership to sell into. And I think with shared ownership models and steward ownership models, it can give those business owners confidence that their business is actually going to remain with the same values that they built it with, the secret sauce that really made them successful.
Right. In a way, it's like securing your legacy as a business owner, that the thing that you set up and the values and the experience that you want to your employees and your stakeholders and your customers to have, that they can continue to have that. Yeah, I just think that's really important. And exciting for a business owner that they have that chance to do it that way. So Derek, what is the state of this movement right now in the US?
Yeah, I'm not sure any one person can really speak to the state of it because it's growing so quickly and it's so diverse. And so many different initiatives are going at the same time. But to the degree I can try, I think the headlines are like growing. Yeah. I think there's now hundreds or thousands of business and community leaders around the country who are really actively looking for, and policymakers economic development professionals, lawyers, like financial professionals, et cetera, who are not actively looking for no solutions.
Right. Just
to this
to interject, like if you're an economic development
Yeah.
professional in a county or city, or you're a mayor or
Yeah.
what, and you see your tax base about to go away,
Yeah.
I can see that being a powerful motivator, right?
That's real. Yeah. Yeah, exactly. So I feel like we're having this moment where, you know, some examples that I like to point out are like Patagonia transitioned to be a steward owned, you know, some of the largest private equity firms in the country are now shouting from the tops of roofs about employee ownership as a part of their investment thesis. Reddit is offering stock to the moderators of their platform in their IPO. Dozens of states, including California, are offering like significant funding and incentives for transitioning businesses to employee ownership as a recovery strategy from COVID. So it really is this kind of watershed moment for the movement in the space where, like I said, it doesn't look like one, right? It looks like this Cambrian explosion of thousands of different solutions being applied in dozens or hundreds of different contexts. And so I think that part of what we're trying to do with this book and this conversation series is to offer to the movement a toolkit, some reflections, some historical examples and awareness, and also in some ways like a builder's perspective on what's possible given that we are in this moment of this Cambrian explosion of people seeking solutions and trying to implement new things.
Yeah. Yeah. So it's not like, the beginning, but maybe it's like the end of the beginning and moving towards more mainstream acceptance. One of the frustrations that I had at Shareable, I talked to the media a lot about these kind of non-mainstream like ways to do things in the economy, right? Problem was like they really love data. They want to measure things and have numbers, and we do that really well in the kind of mainstream economy. IPOs and the stock market and fundings and all this stuff. So I'd really love to see more data about what's happening. And then I think that would just get more pickup, more awareness around that. Zoe, you're smiling. You have
I am. I'm going to push back on
Okay, go ahead. Go for
which
it.
is, I think people often say they want more data, when in fact we just need more stories and more blueprints. And the example I'll give for this is like, we have really strong data for the power of steward ownership from Europe. You know, the stat I told you before, a 6x higher survival rate over a 40-year period, comes directly from data. There's also a report that was published that across 100 studies of employee ownership, employee-owned businesses were demonstrated to have performance benefits and performance gains. So I think like the case for these models is strong. The data exists. And I think in many cases, people just need real world examples. They need to see like my local shop that does XYZ or Patagonia or whomever it is. But I think we just need to realize that real living examples of these businesses are hidden in plain sight, but we're interacting with them every day.
Yeah. I agree with you. It's about changing the narrative about the economy, and you don't change the narrative. This is a cultural thing. You don't change that. The culture with data. That's true. Good.
And that's part of why we decided to do this book, which is this is a book of case studies. A different entry point into this conversation is here's what all the returns data for these investments in these types of businesses look like. But my very strong belief is that one, we need to provide case studies and stories for people. And two, it's the builders who are just willing to go out there and create things and build them. They're going to be the ones who are really pushing.
Yeah. Kevin Clegg at Cle Auto, for instance.
Exactly. I think this book really provides blueprints, real world examples that aren't just theory. They have been in our communities for decades, if not centuries. And part of what I hope for this is the conversations I was having 3-4 years ago when people were just like, we just need a demonstration project that we can show them. They're here. They're already in your communities. But also just really honor the hard work of the folks who have really been at the coalface of these things work on their own.
Yeah. They're kind of like unsung heroes in a way. And it's really nice to give those people like the spotlight. Unfortunately, the United States, the press lionizes those business leaders and businesses that are the most exploitative. It's crazy, right? So I think people like Kevin Clegg, at the coalface should get equal time at least, right?
Absolutely.
So to close out, I want to hear from each of you about this question. What lessons from this research and book project were surprising? What did you learn that you didn't expect to learn? And Zoe, why don't we start with you?
Honestly, I thought it was going to be hard for us to find enough examples for this book. And I feel like our team was rolling their eyes at Derek and I when every week we'd be like, we found this great business or we found this great real estate project. Let's feature them
Right?
too. So I feel the unexpected lesson is that this is far more widespread and than we anticipated, which is extremely exciting for me because Derek and I have deep expertise in this space. This is what we live and breathe
Yeah.
every day and read about this stuff for fun on the weekends. So to find new models that we had never heard of before was just a ton of
Yes.
fun. So
You're like panning for gold. You have this research team and they're out there and you're like, look at this nugget, right? I heard you you couldn't put everything in the book, right? You just had more than you could write about, right?
yeah. And I think the other piece that goes alongside that is just it is possible to stand up these models with everything in our communities as they are today. So you don't need to wait for permission or a new fund or a new policy in order to get started. Folks have already gotten started and they got started years ago.
Yeah.
So we have the blueprints at our fingertips.
Yeah. Yeah. Derek, how about you?
Yeah, I completely agree with everything Zoe just said. I think what I was surprised by most was that even in these kind of broad-based structures where you have businesses collaborating, you still have this really important set of stories about leaders, about like the people who all seem to, there's like a universal gesture that they bring to these projects, which is about giving first, like being the first person to take the risk in a group of businesses looking to do a shared experiment. Turns out to play this amazing and powerful role in actually building these highly collaborative, like very powerful structures in the economy. Even amongst this sort of story of sharing, there is the story of the individual and the power of the first one to say, I'll put my money where my mouth is, has been a really powerful. It's like a beautiful dichotomy in some ways.
Yeah, that just resonates so powerfully with me. Just if you want to change something in the world, a very good, if not the best step is some gesture of generosity, right? It just opens so many doors and you just build such trust. So that's just an awesome note to end on. And this concludes episode 1 of the Assets in Common conversation series. Thank you, Zoe and Derek. That was super fun. I learned a lot and I really value what you guys are doing and that I get a chance to learn from you. In our next episode, we'll have the book writing team. They've gone super deep in their research and writing on case studies. So we're going to dig in some examples that really exemplify the phenomenon. So I look forward to learning more from them and we'll see you next time.